This video will provide a full analysis of the 2026 Child Tax Credit. The Tax Cuts and Jobs Act's sunset clause, originally set for 2026, has been canceled with the passage of the A Big and Beautiful Act. The Child Tax Credit has increased significantly, and we will break down all the major changes. The 2026 tax cliff was a threat that has now been removed. Originally, the Tax Cuts and Jobs Act included a sunset clause that would have halved the credit from $2,000 to $1,000 per child. This reduction would have resulted in families with 3 children losing up to $3,000 in tax credits. Congress took action and officially canceled the sunset clause with the passage of the A Grand and Beautiful Act. This completely abolishes the original tax sunset clause, fundamentally changing the tax landscape for households. The amount of credits has risen instead of falling. Change 1 is the increase of the maximum credit to $2,200 per child, which is $200 more than before, permanently. For a family of 3 children, this means a total base credit of $6,600. A tax credit is a direct deduction on a dollar-by-dollar basis, reducing the amount of tax owed. A tax deduction reduces your taxable income, saving money based on your tax bracket. A tax credit, like the child tax credit, directly reduces the amount of the tax bill. The $2,200 credit saves a full $2,200, making it more effective regardless of the tax rate. Change 2 permanently locks the refundable portion at $1,700 per child for 2026, known as the Additional Child Tax Credit, or ACTC. This is a refund check if a credit remains after the tax bill is zeroed. To claim the refundable portion, you must have at least $2,500 in earned income. Change 3 links the credit to inflation, meaning it will be automatically adjusted with prices. Historically, the child tax credit was a fixed amount not linked to inflation, which caused its purchasing power to shrink. Now, the maximum credit and refundable amount will automatically increase with the cost of living. In summary, the 3 core changes are: the maximum credit increased to $2,200 per child in perpetuity. The refundable part is permanently locked at up to $1,700 per child. And both the credit and the refundable cap are automatically linked to inflation. The revenue phased exit rule has not changed. For single filers or heads of household, the full credit is available for MAGI below $200,000. For married couples filing jointly, the limit is $400,000. For every $1,000 exceeded, the credit is reduced by $50. Let's look at an example of the phased exit calculation for a married couple with 2 children and a combined income of $420,000. Their excess income is $20,000, which results in a $1,000 reduction. The final available credit is $3,400. The most important new regulation is the tightening of Social Security number requirements across the board. This is a widespread change, especially for cross-border taxation, visa holders, and mixed-status families. Under the old rules, children needed an SSN, but parents could file tax returns using an ITIN. The new rules for 2026 require the taxpayer claiming the credit to also have a valid SSN authorized to work in the United States. The ITIN loophole is officially closed. The new SSN regulations have a significant impact on immigrant families. If a single parent files with an ITIN, the family will be denied the $2,200 credit. Immediate tax planning is required to address this major policy shift. Children must be 16 or below by December 31st of the current year. The SSN rules apply to several scenarios. Visa holder families where parents lack an SSN may not claim the credit. Mixed identity families with ITIN parents and SSN children are excluded. Families in cross-border tax situations should reevaluate their filing strategies immediately. The eligibility checklist includes 5 key points. 1. Age test. Children must be 16 or below. 2. Children's SSN. They must have a valid SSN. 3. Applicant's SSN. Applicants must have an SSN authorized to work in the U.S. 4. Income requirements of at least $2,500 in earned income for the refundable portion. 5. Income ceiling of $200,000 for single and $400,000 for married filing jointly. Here is a full data summary for the 2026 Child Tax Credit at a glance. The maximum credit per child is $2,200, and the maximum refundable tax refund is $1,700. The minimum labor income eligible for a tax refund is $2,500. The credit phase-out starts at an income ceiling of $200,000 for singles and heads of household and $400,000 for married filing jointly. The credit is reduced by $50 for every $1,000 exceeded. The credit is inflation-linked and requires SSNs for filers starting in 2026. For an average family of 2 children, you can receive up to $4,400 in tax credits and up to $3,400 in tax refunds. A family with 3 children can receive a total base credit of $6,600 and a maximum tax refund of $5,100. Single-parent families with earnings below $200,000 are eligible for the full credit, but a valid SSN is required to apply. The linking of the credit to inflation is a long-term benefit, guaranteeing the real value of the credit over time. There are situations that require immediate action. Parents filing with an ITIN must assess their eligibility for an SSN, as ITIN holders can no longer claim the credit. High-income families nearing the $200,000 or $400,000 thresholds should plan their income structure to avoid credit loss.